Hi everyone, David here from Market Appraisal, and it's great to be back. Now, this week has been extremely busy for property market news. You'll have seen some bits in the headlines and some of these topics you may not have, but that's why I want to do this video as a bit of a weekly wrap up to try and give you all the awareness and all the knowledge of the things that will help you to make an informed decision. So firstly, I just want to say a massive thank you for all of you out there who've supported the channel so far, all of you that are subscribed. If you're not, please do hit the subscribe button. Don't forget to hit the like button, and please do share these videos with people who you think it's going to help. So lots of topics, as I said. I've got a few notes here to make sure that we don't forget the important things. The first subject that I want to cover is inflation. And the Office for National Statistics came out this week with the official inflation figure. And it wasn't what was expected by everybody, economists, people in the finance sector, the property market. Everybody expected inflation to continue creeping downwards. It was sat at 3.9%. People were expecting it to go to 3.8%, but it actually went the other way and ticked up to 4%. Not a massive increase. Most of it was put down to a big increase in tobacco and alcohol, and that was off the back of the government's budget. But underlying all of this inflation increase, there's a lot of data coming out that the situation in the Red Sea, with cargo ships having to be detoured, escalation in costs and inconvenience and the timescales, the whole supply chain issue is starting to have a major impact on inflation in the background. And that I can see causing us issues where that 4% may not come down. It can potentially go even further. And that's just because of the cost of containers and then the way that filters down through the supply chain. So it's one to keep an eye on. Obviously, the consequences of inflation then kick into the next subject, which is interest rates. Now, interest rates are currently still at 5.25%. The Bank of England have kind of given indications that it's probably going to stay like that for a little while yet before they can consider which way it's going to move. And most analysts are predicting that it will move downwards, probably around May time of the year, start to go down. That said, though, now that we're seeing inflation potentially go the other way, this is where it throws all of those predictions out a little bit. And the big thing you'll see throughout this video is uncertainty, whether it's inflation going up or interest rates now not potentially going down earlier. There's a lot of uncertainty throughout all these subjects that are cropping up this week. Now, the big thing to factor in then is that there may be the brakes put on any interest rate reductions, but people weren't expecting any move before May, June time anyway. So it's just one to keep an eye on, that if inflation continues to rise, we may see a different strategy deployed for interest rates. But for the time being, we don't expect any move from 5.25%. So what's the knock-on effect then for everybody navigating the housing market in terms of mortgages? Well, weirdly, mortgages are acting very differently to how they would normally. Normally, lenders in this kind of situation would, like everybody with the uncertainty, be a little bit cautious. And they tend to then sit back a little bit, evaluate what their products are offering, and not take any risks. But since we've come into the new year, lenders are aggressively competing. And you'll have seen this from some of the YouTube shorts that I've been publishing since the start of the year, that virtually every few days, another lender has been decreasing their rates and repackaging their products. Now, that's a great thing for the property market, because what it's still doing is giving people flexibility to find a mortgage product and then hopefully be able to make the move or remortgage. We've seen some rates now creep down below 4%, and a lot of the lenders are scrabbling to compete with that. And we've also seen some out-of-the-box thinking since starting end of last year, coming into this year, of products that are a little bit different. So we've even seen a 40-year fixed-term mortgage that's been brought out by Perina. They're an online mortgage company that are trying to do things a little bit differently. And what they're saying is that they'll fix you a rate, and that rate will stick with you for the whole 40-year term. It also allows you to move the mortgage to another property. allows you to all the flexibility that you would want in a mortgage product. So that's going to be a really interesting one to keep an eye on, and perhaps one to ask your mortgage broker about. Also seen lots of mortgage products coming up this week with cashback incentives. So again, this is the lenders all trying to compete for your business. Ultimately, the transaction levels within the property market have been depressed. And that is because of all of this uncertainty. And with that depression, lenders are not making as many loans and therefore not making as much money. So now in the new year, they're all aggressively vying for everybody's business. So that is good news, particularly for those people who are due to remortgage this year and those who are in the process of looking for a property. So mortgages, the best thing right now is to obviously speak to your broker, keep up to date, because it is basically changing every day at the moment. The other thing that came out this week that was really interesting was the Land Registry House Price Index. Now, I will do a separate video on all the different house price indexes because it can be very confusing. You've got the Zoopla, Rightmove, Halifax, Nationwide, various different house price indexes. The Land Registry one has just been released for November 2023. In that house price index, it stated that the average house price now stands at 284,950. And it said that property prices had fallen by 0.8% compared to the previous month and fallen by 2.1% compared to the previous year. Now, the thing to bear in mind with the this data from the Land Registry is that it's for completions in November, and therefore those house sales were agreed potentially right back to June in 2023. So what you're seeing is the decline in house prices from potentially that far back. So this is where, as the months progress with the Land Registry data, it will give us much more of a clearer picture of how we've ended up where we are. But for the time being, you can see that November's completions, which were potentially June's sales, were already declining at that stage. So the big thing to bear in mind with that is the huge lag in the data. And then, like I said, I'll do another video on the other house price indexes as to how to use all the various data to try and give you the best possible picture of where house prices are right now. So the conclusion of everything that's come up this week, whether it's inflation, interest rates, how that's impacted mortgages, and then the Land Registry data coming out as well, is that there is a compounding element of uncertainty in the property market at the moment. And there's a few things that I thought I would mention in the video so that you can just keep an eye on them as key factors that are sort of feeding into this uncertainty and affecting the wider economy as well. First off, we've obviously got the Ukraine conflict as to how long that's going to go on, what the outcome's going to be. Obviously, there's a huge amount of funding being funded into that and the issues it's having on things like supply chains still. You've now got the Israel and Hamas war, which again, we don't know what's going to happen with that and how that's going to impact things. There's the risk of that conflict spreading. We're already seeing now Iran getting involved with skirmishes around the Middle East. So there is the potential of the spread of this kind of conflict. So that again gives an element of uncertainty throughout the economy. The next thing is the China and Taiwan situation, where that is on a knife edge and we don't know what's going to happen with that. There's a lot of rhetoric going back both ways. Obviously, China is a major supplier to a lot of the world. So if that gets involved in a conflict, there could be more disruption there. We've also got the elections in the UK and the US this year. Of all the years for us to have major elections in both those big countries, it's certainly going to be a wild one. And that uncertainty, particularly in politics, massively suppresses business in particular, because a lot of businesses hold back in election years because they're waiting to find out what the tax implications are and any legislation changes that can fundamentally change certain business sectors. So typically in election years, it can have a huge amount of disruption on business and then the wider economy. And we're already starting to see that filter through in the figures and in the data. And then the last thing that's obviously adding uncertainty is the inflation and interest rate situation, where it's fluctuating up and down and nobody seems to be able to predict, which they won't be able to. But look at all of those points, and my advice would be just to keep an awareness of all of these things going on. Keep an eye on the mortgage rates and what the lenders are doing. Keep an eye on the inflation figures and the interest rate from the Bank of England. And all of this uncertainty at the moment is just having a negative effect on both house prices, but also people's actual desire to make a move. So we're seeing numbers down in terms of transactions of property sales, as well as the fact that they're struggling to get the finance, and we're struggling to make the move. So the biggest thing in terms of the housing market is to keep an eye on all of these factors. As things change, I'll obviously do videos as well to keep you updated. But the biggest wrap up of the week is that we have a big situation of compounding uncertainty. But that doesn't mean that things can't be done. There are obviously mortgage products out there at the moment where the lenders are getting very competitive. So there are things that can be done. So again, speak to your broker. And we don't know. Hopefully inflation starts to go back down again, and then the interest rates will follow. Who knows? But hopefully this kind of sharing the information, by all means, comment below how these things are affecting you as well. The great thing about these videos is it starts a conversation. People can chip in their viewpoints, and then it's great to help as many people as possible. So once again, I'd like to say thank you very much for all of your support. Don't forget to hit the like button. If you think this will be useful for somebody that's currently navigating the property market, please do share it with them. And as always, thank you, and I'll see you all on the next video.